Hey there, Sam, back with you. January 4th, it's mid-morning. Had another member interested in taking a look at WABI. Now, I was not familiar with this coin, so as I will always do and encourage you to do as well, I put this off the screen here for a second. I went over to CoinGecko and had a look-see. Now, so as I will often suggest, look for a coin with a score of 50 or higher, and if not 50, at least close to 50. So this may be a comer. It's kind of an interesting project. This concerns me always when I don't see a lot of developer activity. But we're sitting with a market cap of almost 140 million. So potentially it may get there. This is the fact that we have a 0% score here is keeping this number lower. But, again, so a member's interested in the coin, so let's take a look at it. See, is there any technical trading? It looks like it's early development, so let's see what we can see. Bulk of it is to Bitcoin, of course, and then it's all traded on Binance. So let's have a look at it. So here it is on Binance. Now, so we had this. I'll show you here. So we had this. Insanity. So we got to get that off the screen so we can look at it. So coming out of that, after that, we get a low that we can work from, and then we clearly go into a 5-wave structure, which is exactly what you want to see coming off of a low after that kind of price action that you're seeing over here. Right? So we want to get a low that we can work with, and then we want to see a 5-wave structure. So now, this was kind of close here, so this is one that you have to measure. So, again, a good example of where an Elliott rule set works for you. So, we know that the third wave cannot be the shortest wave per Elliott rule set. Doesn't have to be the longest, it just can't be the shortest. So, the first thing we always want to do is measure the length of the one wave projected from the second. And if I pull this over, you can see that, well, hang on, click too soon. So, if we're right on that second there, we just barely get there, just barely. But we go just a few ticks beyond the length. Now that does operate on the assumption, right? So this is a judgment call. So if we come here, yeah, we got it there as well. So I propose the 2 is here before we start up, and we get a 1, 2, 3, 4, 5 into a third. So I propose your 2 is here. So we qualify here just barely that the third is longer than the first. So I like a 1, 2, 3 here. We come down for the 4. So 4 overlaps the 1. Okay. So what does that mean? Well, if we overlap the 1, then we are no longer in an impulsive structure. Now we have a diagonal. Okay, so diagonal it's what's happening in a diagonal. It's a battle to start a new trend. So that's why you see more volatility, and it's why it's found only in a 1 wave or in an A wave. So because we get this overlap here, it changes the fib poles. It changes in terms of how we measure. So given that we have a 4 overlapping the 1, we know it's a diagonal. So now we start to measure for the 5. So all of this changes. So given that we have the 1, 2. So first thing, right? So I'm just going to go back to qualify the pivot. So first thing we do, we look at the 1 and see how the 2 traded. Well, we're right to the 50 and we get through the algo target. We know we're past 100% the length of the 1, so high probability that we've got a third in given this price action. Now, we come down deep here for the 4th, and we do get a very shallow B wave, very shallow, but there's a 3-wave subdivision to it. Now, in a diagonal, we measure from the low to the 3 high to get our 4th. And here we go, right? So 50, we wick through the 50, but we hold, and then we head up, and then here's the algo target, and you can see within that we get some subdivision as well. So I could put a 5-wave within this. It's a shallow 2. Then we get our 3. We come down. Then we finish up with a 5. So let me change that. We'll go here and we'll go down to a smaller degree. So that makes sense. So you can see. So here now, take note of this. Assuming that this is right, and I propose that we've got a 1, 2, then we get the big move here. That's the impulsive move. Down for the 4, we don't overlap the 1. So we go within a leading diagonal. We have an impulsive 5th wave, if that makes sense, right? Which is, again, it's not uncommon. We're fighting to get a new trend started here. So given that we have this 5-wave structure, we would also want to measure, we kind of want to qualify this pivot here, and then look at the reaction. But the way we would qualify that, we'd take the length, just as we take the length of the start of it to the third to get the fourth, we take the length. Now we have to go use a different tool here, so I'm going to go to the alternate price projection, or trend-based fib extension is what TradingView calls it. I just was trained and always taught to call it the alternate price projection. So I call it the APP, the alternate price projection. To qualify our fifth, we're going to take the length of the third projected from the fourth. And so if I drag this over, most common target is 100% of the length of the start of it to the high of the third projected from the fourth. Most common target, let me get this, let me get the right, 100%. And what do? Almost to the tick, just a couple of ticks through it. So that gets my attention, right? So what does that tell me? It tells me it's trading technically. So given that I've got now a very good handle on whoops, you got to keep that off the chart, where we are, I can see I've got a very clean, completed leading diagonal. Okay, if I've got a completed 5-wave diagonal, well, what's my next pull? Now I'm pulling from the high to the low because I've completed that 5-wave. I'm looking for my second. So I'm going to go up to my fifth here. And I know that the probability zone for my second is between the 50 and the 618. Well, we'll get a little front run here. Doesn't quite make it. So that could be algos just front running on it, as they will often do. So we can qualify this. We do get, it's shallow, but we get an A, a B, and then a very deep C. But it qualifies, right? So the fact that we get front run at the 50 doesn't disqualify this count, and it gives me some upside targets. So if I've got algo activity, well, here's my first target up here, but that would seem rather shallow in terms of potential targets. It's hard to scrunch this up because I don't want to get that big spike on it. But if this is, so putting this into more context, okay, so I can qualify this. Now I can call this, starting here, I can call this a 1, a 2. I'm going up for a 3, 4, 5. Now I'm going to change that degree, of course. So let's go to blue, and let's go up to just so it's easy to see, we'll go to that. Okay, so now we've got our 1. Okay, perfect Elliott trading. Take this off here. So here's our 2. Now, it's the same process, guys. Same thing over and over again. Over and over again. It's the consistency. That's your advantage. Okay, so now we're going to go back to our alternate price projection tool, or the trend-based fib extension tool. We're going to take the length of the 1 wave. We're going to project it from what we now have as a 2, and we're going to look for the same relationships. Okay, so we know that if this is a 1 wave, just as we had to qualify this 1 and this 3, if this is a 1 in a new trend, well, the third we want to look for it to at least go 100% of the distance of this entire move, currently labeled as a 1 wave. If that's my 1, this is my 2, I want that third to go at least 100%. But the higher probability zone is higher, so I got to scrunch this without keeping that off the. Got to keep that big spike off the chart, or it distorts it. Okay, so my higher probability zone for my third is up here. This is statistically where I'm more likely to see my third reach relative to the length of the 1 projected from the 2. So these all need, potentially go much higher. First thing we got to do is make 100% to qualify it as a third. This is the longer term target. So if we're going to get, again, not likely that we're going to go straight. That it's crypto, so anything could happen. But a straight shot up here is unlikely. Most likely, and what we will anticipate, is that we're going to get there in a third in a 5-wave subdivision. Now, because it's a third, it has to be impulsive. We can't have a diagonal in the third, only in a 1 wave or an A wave. So my roadmap demands that I get an impulsive move here, a 5-wave structure where the 4 low doesn't overlap the 1. Per Elliott rule set, if this count is going to hold, I have to have an impulsive structure. Now think about that for a second. If I know that I've got to have a 5-wave impulsive structure, do you understand how advantageous that is per what the roadmap that I can project? So I have clear location points and pivots where I can disqualify this count. But as long as I see an impulsive wave structure here, I know my count, at least as it's moving forward, is qualified and remains higher probability to be realized than not realized. So as I move towards this target here, I got to do it in 5-wave structure. So I can anticipate very easily that I got to do it something like this. So if I do this, okay, so let me drop the count. Let's go back to white. Let me go back to something more manageable. Let's go to minuet. Okay. So, and I'm going to put the wave on there to make the point, right? So, I've got to have something like this. I cannot have this. I cannot overlap. Now, we don't know for sure that the 1 is in here yet. We just all I'm saying, I'm just kind of eyeballing it because I've had a little reaction here. I don't know that that 1 is in. This could very easily be up here. It wouldn't surprise me that it were. But if it's going to go up here, I can't have this. This has to stay up here. And we can work with those probabilities because we know where statistically, again, after millions, if not more, hundreds of millions of wave counts, right? Billions if you're factoring in every time frame across every asset class. I don't know, it could be trillions, but with a lot of statistical data, we know that we're going to get there. If that's going to be realized, we're going to get there impulsively, and this is not going to overlap. Wherever that 1 high is, that's not going to happen. So that is a huge advantage to me as I'm approaching trying to trade this coin. So first I got to figure out, well, what's happening here? So far, I may just have a 1, 2, and going up for a 3 because within my 1 wave, now pay attention to this. This is a key kind of a point that can be confusing to people at first, right? Remember that a 1 wave can have a diagonal in it, just as this 1 wave had a diagonal. Only place I can find it is a 1 wave or an A wave. But I could have a diagonal in my 1 wave here, followed by a diagonal in my 1 wave here. That doesn't disqualify the count. It's the larger degree that would disqualify if the 4 overlaps. But I very certainly could have. So if I stay with this, right, the idea here, I've got some people struggling with this, so I'm taking a little extra time to qualify this. So because I've got that count on there, so I need a 5-wave sequence at some point up to give me a completed 1 wave. But that 5 wave could look like this. It could look like this. It could, because it's a 1 wave. So I could get overlap in this one. Let me lower that degree. Let me go down to, okay. You see, so in here, I could have a 1. I could have a diagonal. I could overlap into my 1 wave because it's a 1 wave. I'm projecting that I'm going to get a 1, 2. There's the big money maker, right? Do you see what this would be? So look at the count here. So I'm looking for the 3rd. So this is your money maker. That's the 3rd of the 3rd. That's where you want to be. If you can position yourself to get into that, that's where you make your bank. Because, and the other advantage of it is that, so again, carrying this forward. Okay, if that's going to be my 3rd, just as in this 3rd, it has to stay impulsive. This wave has to stay impulsive, right? It's waves within waves within waves. So this has to stay impulsive. Do you see that? I cannot have, so if I move it over to try and give it scale, I cannot have this. Can't overlap it. It's got to be an impulse, just as this in white has to be an impulse. Do you see the huge advantage that gives you? This is why when I'm teaching or showing you, I'm trying to reinforce the benefits of trading Elliott wave. Now, you don't have to use it. You don't have to have it. You could be very, very successful just trading structure, pitchforks, median line rule set, straight algo fib pulls. You could be very, very, very successful doing that. But if you're willing to do the extra work and learn these rule dynamics and these nuances and these tendencies, you have a huge advantage over those that don't do it. Huge, huge. Particularly with regards to risk reward. Because it was, see what's happening here. So if I put it now if you're just thinking algo. Okay, so if I work from here, okay, all I'm looking for is the 50 to the negative 23.6. That's the moneymaker algo move. What we're trying to do is weave around that. But the dominant move is based off of what the algos are doing, which is they buy the 50, they reverse at on the other side of the 65. But as Elliott wave traders, we're trying to kind of weave our way around what they're doing, and then using these Elliott wave rule sets to our advantage, where we know we have tendencies. We have statistical research to support what we've laid out as our roadmap. So I know if that's a 1-2. Statistically, the odds are the highest probability for my third is to go up here to the 1-6-1-8. Well, that doesn't mean that it has to stop there, but that's where I'm anticipating that it reaches. Again, could fail, could just, I mean, nothing says this must happen, but the fact that I have a 1 wave to start this off sure sets me up nicely. So now I'm just trying to find my way into this subdivision. So do I have a 1, 2, 3? Maybe this is my 4. That's what I'm looking for. So could I get in here? Right? So suppose I could get in here. Let me take this off. If I can get a 1, 2 and I come down for the 4, if I can get in here. Now, if this is a diagonal, if we're going to overlap the 1 and I'm going to get in at the 50, look what I'm trying to do. I'm trying to get long right here, knowing all of this is likely to unfold to get me up to this point. Now, where's my risk? Where am I out? I'm risking, if I'm going to buy at the 50, well, a 2 wave could go deeper, but if you want to be ultra disciplined, I'm risking this much right here. Okay, I'm just going to do it visually to make this much. Okay, that's the reason to use Elliott wave, because I'm just trying to get a little spot to get into that big train. And look at all the places that I've got to potentially add. I could add here, I could add here, I could add here, I could add here. If this is going to be the roadmap that it follows. Now, I don't know that it is, but it certainly is setting up for that potential. Now, I mean, Elliott counts fail all the time. Now, one of the real advantages for us in crypto is that everything is so wildly bullish. And we have so much greed. Fear and greed is what. So, if you think about the crowd dynamics, what create these patterns are fear and greed. Greed, fear. Greed, fear. Stops getting run. People get nervous. They bail. That's what creates the wave structure. That was Elliott's whole premise. I'm just looking for ways that I can get in here to take advantage of that. And if I can get in here and not get stopped out, wow, am I positioned nicely for potentially this with all sorts of places that I could add. So I can get the maximum leverage, because most of the time this isn't going to follow it perfectly. That's just the reality. It's just trading reality. Deal with it, accept it. Don't try and force it. But the time that it does, and it does, when it follows it, and amazingly, crypto is wildly technical. I mean, it's surprising me daily how technical it is. There is no reason to suspect that this won't play this way until it doesn't. So you trade it until it fails. So if you can get in here, yeah, you add here. Yes, you add here. Yes, you add here. Yes, you add here. Because if and when it gets up there, wow, have you made a lot of money. And you were able to do it without taking huge amounts of risk. Your initial risk is right here relative to this and all those potential adds, knowing that each time if something happens, so if I'm here, I got to have an impulse. If it takes that out, counts wrong. I'm out. Now, if that were to happen, let's say we got a 1-2 here, and I take this out here. I entered down here. I've still got a nice trade underway. I still made money. If it doesn't do that, see, that's where you have the opportunity to, let me do it this way. So you could get in here, you could get in right here, looking for that as your target, but knowing that if it takes out that wave 1 high, I'm out. So I get yet again that same sort of very low risk entry into the market. Very low risk. If I'm stopped out, boom, I'm out. Okay, no problem. So what's happening now? If this becomes a diagonal, well then my count is wrong. That doesn't mean it couldn't continue to go higher, because maybe I have a diagonal followed by another diagonal. Maybe this is a 1-2-1-2. I mean, in crypto, No telling how high they can go. But I don't want to be in it now because my premise was that I had an impulse. And if that's going to take out that one high, my stop's is taking me out right here. I still made money. I still have a nice trade. I may reevaluate, or I may just move on to the next trade. But do you see that? I'm trying to point this out to you so you understand the advantage of it. All right, I didn't mean to get on that rant here today on WABI, but there it is. All right, that's 20 minutes into it. I should probably wrap it there. All right, guys, that's it for now.